This is a video reviewer for the Certified Public Accountant Licensure Examination. This is CPA Reviewer No. 1, featuring questions on taxation. There are 10 questions featured in this reviewer. All questions are modeled on actual questions that appeared on previous CPA board exams. Before you proceed, please don't forget to subscribe to Review Central and click the bell icon to make sure you are notified of all new reviewers and other important updates. Let's begin. Question number 1.
One of the characteristics of internal revenue laws is that they are A. Penal in nature. B. Political in nature. C. Criminal in nature. D. Generally prospective in application.
The correct answer is D. One of the key characteristics of internal revenue laws in the Philippines is that they are generally prospective in application, meaning that new tax laws typically apply to future transactions rather than retroactively affecting past transactions. While some tax laws may have provisions that allow for retroactive application, this is not the norm, and most tax legislation is intended to apply going forward to provide certainty to taxpayers. Let's also analyze and evaluate the other answer choices. Choice A. Penal in nature. While penalties can arise from violations of tax laws, not all aspects of internal revenue laws are penal in nature. Choice B. Political in nature. Although taxation is influenced by political factors, this is not a specific characteristic of internal revenue laws. Choice C. Criminal in nature. Internal revenue laws can lead to criminal liability, like in cases of tax evasion, but, like in A, this is not a defining characteristic. Thus, choice D is the most accurate characterization of internal revenue laws, at least in the Philippine context. Question number 2.
Given the statement, the tax should be based on the taxpayer's ability to pay. Which of the following statements is wrong? A. As a basic principle of taxation. This is called theoretical justice. B. As a theory of taxation. This is called ability to pay theory. C. No person shall be imprisoned for non-payment of a tax.
D. A graduated tax table is in consonance with this rule.
The incorrect statement, and therefore the correct answer, is C. No person shall be imprisoned for non-payment of a tax. Based on the Philippine Constitution, answer choice C should be considered incorrect because it implies a blanket prohibition on imprisonment for non-payment of all taxes, which is not accurate. The prohibition on imprisonment applies only to the non-payment of the poll tax. Question number 3.
A tax must be imposed for a public purpose. Which of the following is not a public purpose? A. Public education. B. National defense. C. Improvement of the sugar industry. D. None of the above.
The correct answer is D. None of the above. All the listed purposes, public education, national defense, and improvement of the sugar industry, are considered public purposes under Philippine taxation laws. Here's why. Public education promotes the common good by investing in the development and knowledge of citizens. National defense serves the general welfare and security of the entire country. Seemingly, improvement of the sugar industry is not a public purpose. But the Supreme Court of the Philippines ruled in a case that, since the improvement of the sugar industry will result in the improvement of the national economy, the tax is for a public purpose. Therefore, none of the listed purposes are outside the scope of what is considered a public purpose for taxation in the Philippines. Hence, answer choice D is the correct answer. Question number 4.
Which of the following statements is not correct? A. The power of taxation is shared by the legislative and executive departments of government. B. The prohibition of delegation by the state of the power of taxation will still allow the Bureau of Internal Revenue to modify the rules on time for filing of returns and payment of taxes. C. An inherent limitation of taxation may be disregarded by the application of a constitutional limitation. D. the property of an educational institution operated by a religious order is exempt from property tax, but its income is subject to income tax.
The incorrect statement, and therefore the correct answer, is B. The statement in answer choice B is misleading and incorrect because it suggests that the Bureau of Internal Revenue can modify fundamental rules regarding the power of taxation, which it cannot do. The prohibition of delegation means that while the executive can administer and enforce tax laws, it cannot change the substance of those laws or create new taxes. Only the legislative department has that power. Therefore, the modification of fundamental tax rules should come from legislative action, not executive discretion. Here's why the other options are correct based on Philippine taxation principles. In Statement A, the term share can be nuanced. While it is true that both branches of government have roles related to taxation, the legislature creating laws and the executive enforcing them, the legislative branch is the only one with the actual power to impose taxes. Still, while the power of taxation itself is predominantly legislative, they both play important roles and, therefore, share the power of taxation. Statement C acknowledges that constitutional limitations can override inherent limitations. Lastly, Statement D is consistent with the tax exemptions provided to religious and educational institutions. Question number 5.
Which of the following is not a scheme of shifting the incidence of taxation? A. The manufacturer transfers the tax to the consumer by adding the tax to the selling price of the goods sold. B. Changing the terms of the sale like FOB shipping point in the Philippines to FOB destination abroad, so that the title passes abroad instead of in the Philippines. C. The purchaser asks for a discount or refuses to buy at regular prices unless it is reduced by the amount equal to the tax he will pay. D. The manufacturer transfers the sales tax to the distributor, then in turn to the wholesaler, in turn to the retailer and finally to the consumer.
The correct answer is B. Changing the terms of the sale, like FOB shipping point in the Philippines to FOB destination abroad, so that the title passes abroad instead of in the Philippines, is not a scheme of shifting the incidence of taxation. Shifting the incidence of taxation refers to the transfer of the tax burden from the taxpayer who is initially liable to pay the tax to another party, usually the final consumer. Let's analyze each option. A and D describe typical methods of shifting taxes through the supply chain, passing the tax burden ultimately to the consumer. C describes a way the purchaser could attempt to negotiate or avoid bearing the tax burden directly. B involves a change in the terms of the sale to effect where the title of goods is transferred, that is, abroad vis-a-vis domestically. This does not directly relate to shifting the incidence of taxation, but rather involves altering the legal point of transfer to potentially avoid taxation within the Philippines. It's more about avoiding or changing the tax liability rather than shifting the tax burden. Therefore, B is not a scheme of shifting the incidence of taxation. Question number 6.
Which of the following is not an example of excise tax? A. Real property tax. B. Transfer tax. C. Income tax. D. Sales tax.
The correct answer is A. Real property tax. Excise taxes are, basically, a tax on privileges. They are taxes imposed on specific goods, services, or transactions, typically based on quantity or value. They are distinct from taxes on general ownership or wealth. Let's examine each option. Real property tax is a direct tax on the ownership of real property, not an excise tax and, therefore, is the correct answer we are looking for. Transfer tax is an excise tax imposed on the transfer of ownership or title of property. Income tax, while technically not an excise tax, is also not a tax on specific goods or services, so it's quite similar to excise tax in this sense. Sales tax is an excise tax on the sale of goods or services. In this question, answer choice A is the only one that is clearly not an excise tax since real property tax is a direct tax on the value of real estate owned by an individual or entity, making it distinct from excise taxes. Question number 7.
Tax of a fixed proportion of the value of the property with respect to which the tax is assessed and requires the intervention of assessors or appraisers to estimate the value of such property before the amount due from each taxpayer can be determined is known as A. Specific, B. Ad valorem, C. Special or regulatory, D. Answer not given.
The correct answer is B. Ad valorem. An ad valorem tax is a tax based on the value of property. The term ad valorem is Latin for according to value. This type of tax is typically a percentage of the assessed value of the property, which is why it requires the intervention of assessors or appraisers to estimate the property's value. Here's a breakdown of the given options. Answer choice A refers to a tax imposed on a fixed amount per unit, like a per liter tax on fuel, not based on value. Answer choice B, ad valorem, is the correct answer as it involves taxing property based on its assessed value. Answer choice are taxes levied for a specific purpose, often to regulate an activity, not necessarily based on value. Answer choice D is obviously not applicable since the correct answer is B. Therefore, B, ad valorem, is indeed the correct answer. Question number 8.
Given two statements. Statement 1. Because the power of taxation is inherent in the state, the inherent limitations on the power of taxation always applies. Statement 2. Inherent limitations on the power of taxation must give way to constitutional limitations. A. Both statements are true. B. Statement 1 is true, Statement 2 is false. C. Statement 1 is false, Statement 2 is true. D. Both statements are false.
The correct answer is C. Statement 1 is false, while Statement 2 is true. Statement 2 is the reason why Statement 1 is false. Here's the reasoning. Statement 1 is false. While the power of taxation is inherent in the state, the inherent limitations, such as public purpose, territoriality, non-delegability, and international comity, do not always apply unconditionally. They are subject to specific laws and constitutional provisions. Thus, inherent limitations are constrained by the framework established by the Constitution. Statement 2 is true. Constitutional limitations take precedence over inherent limitations. For example, rights enshrined in the Bill of Rights, examples. Due process, equal protection, and specific provisions, example. Prohibition against imprisonment for non-payment of a poll tax, can override inherent limitations. In Philippine taxation law, constitutional limitations are paramount because the Constitution is the supreme law of the land. Question number 9.
A fundamental rule in taxation is that the property of one country may not be taxed by another country. This is known as A. Reciprocity, B. International law, C. International comity, D. International inhibition.
The correct answer is C. International comity. Let's examine and explain each answer choice. A. Reciprocity. This refers to mutual exchange of privileges or benefits between countries, but it is not specifically focused on the prohibition of taxing each other's property. B. International law. This term refers broadly to the set of rules and principles governing relations between sovereign states and other international actors, but it doesn't specifically address the taxation of property across countries. C. International comity. Another term for international comity is international courtesy. This is the correct answer. International comity refers to the practice of mutual recognition and respect between nations, which includes the principle that one country should not impose taxes on the property of another country's residents. It encompasses the idea of respecting each other's jurisdiction and sovereignty. D. International inhibition. This is not a standard term used in taxation or international relations and does not accurately describe the principle in question. Therefore, the principle that the property of one country may not be taxed by another country is best described as international comity. Question number 10.
In case of conflict between tax laws and generally accepted accounting principles, or GAAP. A. Tax laws shall prevail over GAAP. B. GAAP shall prevail over tax laws. C. Both tax laws and GAAP shall be enforced. D. The issue shall be resolved by the courts.
The correct answer is A. Tax laws shall prevail over GAAP. In the Philippines, tax laws take precedence over generally accepted accounting principles, or GAAP. This means that when there is a conflict between the two, taxpayers must comply with the provisions of tax laws, even if it contradicts the reporting and measurement standards established by GAAP. Tax laws are designed to ensure compliance with tax obligations and to protect the revenue of the government, while GAAP is primarily concerned with financial reporting and providing a true and fair view of a company's financial position. Therefore, in any conflict, tax laws will dictate how taxes are calculated and reported, and taxpayers must adhere to these laws. You have just watched CPA Board Exam Reviewer No. 1, featuring questions on taxation. Check out more related review videos and playlists on our channel. If you find this useful, please like and share. Leave a comment to share your thoughts or questions regarding this reviewer or any particular part of it. If you haven't done so yet, please subscribe to Review Central and click the bell button to get notified of all future reviewers and updates. Like and follow us on your favorite social media platforms. Good luck to your forthcoming CPA board exam, and we look forward to your long and fulfilling career in accounting and finance.